Hey everyone, this is Tish Griffin, back with you again, Family Credit Management, and we are here to just offer you advice if you are looking for help with your finances, with dealing with your credit cards or collection agencies, budgeting, investing, anything finance related that we can help with. That's what we're available for. I do want to let you know that if you need the help, you can reach out to a certified counselor at 800-994-3328 or go to the website at familycredit.org. There is help out there. You just need to be able to find the right resources, and Family Credit, please use as a resource to get your finances together. Now, right now in the economy, there's so much going on, so much talk about recession. You hear it looming that recession is coming, recession is here, it's almost here. We might break even, we don't know. But we know that inflation has hit. We know inflation, it exists because guess what? Inflation simply states that the price of everything has risen. And we know over the past 12 months, even prices have gone up so much as the cost of gas, to even a loaf of bread, to eggs, groceries, whatever it is that we're consuming, those prices have gone up. Not just that, but the cost to actually even live. We've got the cost of home ownership going up as far as the interest rates going up, and now rents are going up because guess what? Property taxes in the area are going up as well. So these are things that we need to think about because a lot of times in our budget, we've got our expenses that are increasing, but guess what? Our income is remaining the same. And in some cases, we might even be losing income. So we want to think about those things and know how is it that we can make ends meet? What are those things that we should be focusing on in our budget to keep things afloat? And that's where we have all of the questions. So we want to be able to set ourselves apart, and we don't know what's going to happen in the future. Right now there's talk of recession hitting, and recession simply means that there are 2 periods of decline in the gross domestic product. But we want to say, okay, I hear that, but how does it relate to me? What does that actually mean? And simply put, we're not able to afford things like we used to. We see that people are spending, and the recession really has not hit like we think it should have because people continue to spend. But it's what we're spending our money on nowadays. In the past, we were spending on luxury items, big ticket items, that huge car purchase, spending on that family vacation, spending thousands and thousands of dollars there. But now what we see happening is that we're taking the spending and we're spending on things that we actually need, like food, shelter, things that we need to survive. So we want to be able to look at our budget and make everything count because we don't know what's going to happen over the next 24 months, over the next 12 months. We have no idea, but we want to be prepared. So I challenge you, I want to ask you, how is it that you should be prepared for the future? I've got a few suggestions for you. But first, if you need any help, again, reach out to familycredit.org. There's some tools that are there. There's some people that you can talk to, certified credit counselors that will help. Now, when we think about what exactly we need to be focusing on financially to make everything work, first thing, you want to be able to pay down your debt. That's very important. Getting out of debt is super important. Then you want to be able to keep your credit together while you are doing that. And last but not least, after you've paid that debt off, you want to take that money and be able to save, right? We need to make sure that we have savings and we don't drain it and we keep the savings in the right places. So let's talk about that for a minute. What do I mean as far as keeping savings in the right places? A lot of people have switched to using Venmo, PayPal, Cash App. Does that sound familiar to you? A lot of us, we use it every single day and it's convenient. It's there for a reason. But what you want to actually pay attention to, or know that those vehicles, they're not really safe vehicles for you to keep your money in. It's not a safe place. Yes, it's good for right now. You can use it right now, but guess what? Something can happen in the future. That money can be wiped out and there'll be nothing that you can do about it. The best place for you to start off by having your money saved is in a regular bank account, a checking or a savings account. Now that could be through a bank or a credit union. And the reason why I'm saying that is because the banks, they are backed by FDIC insurance. And with credit unions, it's the NCUA. And what happens with that is that whatever money you put into it, if you've got a regular bank account, as long as you have the balance under $250,000, if something were to happen to that bank was to go away, you still would be able to get your money. The same can't be said for Cash App or PayPal. If they went away, the money is gone. You may have cases where people can pull from your accounts and there'll be nothing that you can do about it. But if you're using a regular checking or a savings account with FDIC insurance, guess what? You will get that money back up to $250,000. So if you've got more than that, that does mean if you've got more than that, let's say you've got $500,000 sitting in one bank account. If something were to happen to that bank, you would only get $250,000 back. And you may say, well, that's still a ripoff. But no, think about it this way. You can have as many bank accounts as you possibly want. So if you got $250,000 in one account, you can have it in another. And if you reach that max, you can get another. You can have different accounts for different reasons, but only up to $250,000 is insured. And that is something that's great for you to know because, again, we want to make sure that you're protected and that you know you can get that money back. Now, on the flip side of that, if you put $250,000 in Cash App, it can be gone today, tomorrow, and you may not even spend it. Let's say someone found your Cash App card and they spent everything you had. Guess what? It's possible that you don't get that money back because there's no insurance, no protection that says that they have to give that back to you. So that is another reason why if you've got those things, you want to make sure that you tie it to your regular bank account so that the money can always go back to the bank account where it's protected and it's safe. Banks are there for a reason, not just for making money, right? They want to hold your assets because, again, that's how they keep their money as well, how they keep everything flowing. So if you're thinking about how can you save money and where you should be putting your money, don't rely totally on those apps that you see, such as Robinhood or Cash App. There's a lot of different online methods, but you want to make sure that whatever you do is backed by FDIC insurance. And the best way to do that is go to your bank. Now, banks have a lot of other products too. We'll talk about, investing a little bit in another episode too. And that way you can find out more information about just what those products have that the banks have to offer. But again, we're focusing on saving our money after we make sure our credit is together and we're paying down our debt. Paying down your debt, again, that is also important. With whatever's coming on or happening in the economy, a lot of people are finding that even if they've got perfect credit, the most precious credit, everything is always good, they've never made a late payment, some people are finding that, guess what, their credit limits are getting reduced, that they don't have that extra credit line that they thought. In some cases, people are finding that their accounts are being closed and they haven't even requested it. The reason why I'm telling you that is because I want you to keep an eye on your credit report. You should be monitoring your credit at all times. So if you can do that, go for it. You can look at annualcreditreport.com, best way for you to go get your credit report. And then you can monitor it because you get one free credit report from each bureau throughout the year. That means 3 reports. So you can get one now, get another in 4 months, get another in 4 months after that, and just keep that going so that you're looking at one report and you're knowing exactly what's there, and you're knowing when your accounts are paid off, that they're still open, that your credit lines have not been reduced, because of course we want you to keep everything in good standing as well. Again, we don't know what's going to happen over the next few months. next few years. So you want to have a precise picture of what your financial obligations are, what your financial picture is. Start by pulling that report, making sure you're keeping your eye on it. And we want you to actively work on paying down debt. Keep in mind, anytime you're paying down your debt, you're also increasing, by paying down your debt, it's kind of like you're putting that into your savings account too, because as you pay down your debt, then once you're finished, you can take that money and start saving it wisely. If you're having problems with paying your debt, you can reach out to a counselor at 800-994-3328 or at familycredit.org. And you can sit down, go over your budget, go over your credit report, everything to help you get things back on track. And then as we talk about paying down your debt, you also want to make sure that you keep your credit together at the same time. When you're paying down your debt, it's important that you remember you're paying attention to your credit limits and your minimum payments. You want to make sure that you've timelined that so that you're keeping some credit available and open. You're not trying to use up everything. They say that if you use 30% of your debt or 30% of your limits, that's when your credit score starts to really take a dive. Keep that in mind, because if you're at 30%, and you may say, well, I'm not using that much, right? But the creditors see that, and they see that as, I might not lend to her because all of her money is going to start going towards her debt. That means that she's going to get desperate. I don't want to lend. So you want to make sure that you are staying under that 30%. Again, the people with the best credit score, the strongest credit, are only using 7% of their available credit. 7%. That means if you have a $100 credit card, guess what? You're only using $7 of that. And you're keeping it looking good. So keep that in mind. Make sure that your credit, you know what your credit limits are. If your credit limit increases, you should actually know. If it decreases, of course, you should definitely know. Another reason why it's important to pay attention to your credit report, but pay attention to your scores and know what's on your reports. Because again, we want to work towards paying those down. When you're looking at the credits, a lot of times people say, well, I don't know how to do this. I know I want my debt paid off and I'm paying extra each month and it does not seem to be going anywhere. Well, there's a method that I want you to pay attention to, and I want you to try this because it really does work. So when you're going over your budget, make sure you know what your minimum payments are. Take those out of your budget and account for those. You want to send those on those credit cards each and every single month, like clockwork, making sure you're paying your minimum payment. But also, when you get to your budget, you want to see how much money do you have left over in the course of the month, how much discretionary income that you have at the course of the month that you can put towards these debts. With that being said, let's say you've got $500 left over each month after you pay all of your bills. But for this debt, I only want to pay an additional $50. You can do that. You want to take that $50 and you're going to put it on the card either with the highest interest or the lowest balance. Either way you go, you're going to get the same results. A lot of times people want to use the smallest balance though, because that way you see those accounts getting paid off sooner. So you're going to take that extra $50, make that minimum payment on the smallest balance every single month. You're going to pay the rest of them, the minimum, just like clockwork. And you'll start to see that those balances are coming down really, really fast. That first credit card will be paid off in no time. Then you can take that full payment. Let's say that minimum payment was $20 and you added the $50, so you're paying $70 a month. Now you can take that $70 and put it on the next one. Once that one's paid off, you're going to put that on the next one. So now you're rolling that 70 into this other 50. Now you've got 120 going on that one. You're going to put it on the next one after they're paid off. Now, keep in mind, while you're doing this though, you want to leave the accounts open. You want them open. You don't want to close them, because when you close an account, it takes away from that credit history and now you're reducing your score again. So keep the balance low or paid off, but keep it open. You want to make sure it's open and active. That doesn't mean use it. I mean, you can use it every now and then, but you want to use it responsibly. That's the trick, using your credit responsibly to make it work for you. And then if you continue with this method of taking the money and putting it on a different account, and as that one gets paid, you're putting it on another one. That's called a snowball effect. And when you do that, no matter how much you're doing it, you can pay off these accounts within 3 to 5 years if you're just sticking with that minimum. Now, as you add more to it, it'll be even quicker. So let's say you don't want to do that 50, you want to do more than that. You want to do 100 or even that whole 500. But if you're doing it that way and you're doing it consistently, you're disciplining yourself to be able to do it, it's going to work in your favor. Now, let's say, I don't think I can do that. I do want to pay these bills, but just that whole playing around with it, sending it to different places, that doesn't work for me. I feel more comfortable just making one payment. The counselors at Family Credit can help you with that too. That's what they're there for. So you can reach out at 800-994-3328 and talk to them about that. They work with credit card companies all the time. They know what they're going to do. They know what they can do to help you out. And they know the ones that aren't likely to help, so that you can devise a plan to get out of debt and pay those down. Because again, next few years, you want to be debt free. That should be an actual goal that you focus on, disciplining yourself to pay off that debt. Again, you want to keep your credit open though, because we know you're going to need credit in the future. So that's why you want to keep those accounts open in good standings, keep the credit limits where they're at, and notice any changes or inconsistencies that you may come across with those accounts. Always good idea. And then you want to be able to keep your credit together. Every now and then we get a collection notice. We get something from a collection agency, and we'll talk about dealing with those in another episode. You'll be able to see how you can actually deal with those collection agencies to get them off your back. But as you're paying off those collections, you want to keep that in mind, that maybe you can't pay the full thing. You know you owe them a balance. You can't pay the full thing, but you do want to get that account paid off. When we're thinking about keeping our credit together, keep in mind that credit report's got so much information. It details years and years of information. But the score only takes into account the last 24 months of history. So yes, if you go and you apply for a car loan, you will see all the different places that you applied to. But just something bad that happens today matters less and less as time goes. So you'll see that listed, but does it affect your score? That's a different question. Remember, when you're thinking about your credit score, the score ranges from 350 to 850 roughly. There's a lot of different variations of scores, a lot of different models, but the best model for you to look at would be the MyFICO model, because that's where the credit bureaus actually model what their credit scores are against that. So if you go into myfico.com, you can find the best score. Also, you can get the score through annualcreditreport.com. Yes, you get access to your credit reports and the score just from going to that one resource. But you want to know what those are, and you want to pay attention to it. Don't want to scare you either, but keep this in mind. If you're looking at your credit score, it ranges. And it changes as you change. So just because your score is one thing today, it may be totally different 3 months from now. And I'm pointing this out because I want you to know that if something is going on and you feel like your credit is not high enough, you feel like your score is not high enough, you don't know why you should apply for financing, you're not going to get the help that you seek because of your score. Keep in mind that it only takes one moment for you to make a change and make things better. Your score changes every single day, and it only looks at the last 24 months worth of history, which means that if you mess up today, 6 months from now, it's not going to matter as much. A year from now, it probably won't matter that much at all. Yes, it'll affect your score slightly, but the key is to get enough positives to counteract all negatives that you may see happening on that report. With that being said, if you've got a low score today, you can sit down and look and say, what can I do to get this up? And you don't need to pay anyone anything extra or anything like that. You don't need to be taken advantage of. Finding help is something that you can do for yourself. You can reach out to a counselor, Family Credit, 800-994-3328. But you can sit down and look at your credit report and say, okay, what's my plan of action? How am I going to pay these debts off? How much money do I have to go towards these debts? And while you're looking at it, you may want to say, is some of the stuff even mine? Different show. But keep that in mind as you go through dealing with your finances. It's so easy for you to turn things back around. So over the next few months, I want you to focus on paying down your debt. I want you to focus on keeping your credit together. And I want you to focus on building your savings once this debt has been paid off. So it's all about what are you going to do with that to get those things taken care of. So how are you going to make your savings grow? What are those things that you can do? Of course, paying the debt. That's number one. And you want to make sure that you're making money smart decisions with your money as well. We'll talk about budgeting as well in our next episode, but I want you to think about that. Focus on paying off the debt, looking at the collection agencies, getting the help that you need. Now, if you're dealing with collection agencies and you don't know what to do, because of course, a lot of times we see that they can harass you at the wrong times. They know when you're doing something. And yes, they've got their eye on your credit report. The minute that they see your score getting better, they see that you actually caring about it, you may see those medical bills start to pop up, or those collection notices pop up, or those phone calls from places that you haven't heard from in like 5 to 7 or 10 years. Why? Because they see that you're getting things back on track. So they're like, okay, I want my money too. You said you're going to pay me. You never did. Let me throw this bill back up there. And those are things that you also need to watch out for if you are looking at getting things back on track. We see this happen all the time. Information flows back and forth between creditors, between lenders, and the credit bureaus all the time. So they do have access to see when you're trying to get things better. So let's say you've gotten your credit together. Your score is going up. It's passing 650, going to 700, and all of a sudden you get a collection notice. And it says, hey, if you don't pay us within 30 days, we're going to put this on your credit report. That's going to take your score down, especially if they report to the credit bureaus. Any collection letter that you get, first off, I want you to scan it for that purpose. See if they report to the credit bureaus. If they do, you know how you want to handle it, because if they're going to report it to the credit bureaus, you want to do what you can so it does not affect your score, especially if you're working to get things back on track. Now, if they don't report to the credit bureaus, you can call them and ask them and see what they say, but they should be able to work out arrangements with you that will work for your budget as well. So when you're dealing with those collection agencies, don't let them bully you. You have to let them know, hey, I know I have this debt. I'm not able to pay it right now, but this is what I can do. Or if you want to say, hey, I can't afford it right now, but is there a way that if I give you a percentage of it, or let's say if I've got $100 balance, if I give you $20, will you consider that account paid in full? You can suggest that as well. That's just an option on trying to do a settlement yourself with that very creditor. So that's going to come in huge when we're looking at paying down our debt and keeping our credit together, because a lot of times those collection agencies, they will report to the credit bureaus when they see that you are getting everything back under control. So again, keep that in mind. Monitor your credit report, because that's how you're going to know if those places are looking and if they're going to be sending something for you. So if you have any other questions, I do want you to reach out to Family Credit Management at 800-994-3328. And you can go online to the website at familycredit.org. You can chat with a counselor and you can get those questions answered. They can talk to you about your credit report, your budget, and dealing with those creditors too. Great way for you to get things back on track. So if you've got any other questions, again, feel free to reach out. And until next week, we'll see you again.